there are question marks around AI. Is it something which is creating a productivity boom? Is it really having an impact, a positive impact on earnings? Or are we creating more of a concentration risk which could end up in tears?
Yeah, so the answer is we don't know. We're figuring it out as we play along, right? Right now, we've seen a tremendous amount of capital that's gone into the whole AI ecosystem. We've not seen real revenues come in yet. We've not seen productivity really pick up yet. Companies are talking about it, but nobody's got anything tangible to show. And I think from my perspective, like everything's not all perfect and shiny out there, right? One of the big nuances, there's been so much capital that's gone into AI, right? Whether it's been public markets, private markets, et cetera. And we're starting to have to figure out, well, what's the return on that investment? And the return on that investment looks a lot more concerning given a lot of the enthusiasm that went and supported this, and you're starting to see the markets react to it. I think the fixed income markets kind of helped lead, right? We've seen the CDS spreads start picking up. The equity markets are noticing this. The equity markets are also noticing that what drove the Mag 7 in that ilk for a long period of time was this unbelievable free cash flow generation. Capital light cash, right? All of a sudden, this is really capital intensive cash. They look like industrials.
This CapEx cycle on AI is the biggest CapEx cycle I have seen in that entire 25-year history. Hundreds of billions of dollars being thrown at something. Again, the confidence of these business managers that this is the right step and the right activity is a little compelling to me. The certainty that you hear from leadership that this is where the future is going. I didn't know where cloud computing was going. I'm pretty happy with how it turned out. I don't know where AI is going. It is really, we are figuring it out as we go, but I'm pretty confident I'm going to be pleased with the results.
I love the demand of the Mag 7 in terms of signing a long-term lease, 10, 15-year lease. They're AA rated credits. Even if the credit slips a little bit, I've still got likely an investment grade credit over the foreseeable future, backing the assets that we're investing in, but yet I don't have to worry about, what is the next quarterly earnings going to look like and how is the market reacting to that, which is one of the reasons why we're excited about AI and the prospects, particularly when it relates to things like infrastructure and real estate, the hard asset elements of that.
I think capital markets are also starting to change, or these companies are starting to change the way they look at capital markets. Previously it was all equity financing, it was all free cash flow for their investing. We've had in the fixed income markets, huge deals, some of the biggest on record for some of these large Meta, Oracle, all the companies that we're talking about. And they're not traditionally accessing the fixed income markets. They've never really used it. They didn't need to. And now they're starting to manage their balance sheet a little differently, which is, I take it as a good sign because they're starting to think about their sources of capital differently than they had before. Never worried about bottom line profits. And now that, fixed income investors, we look at things differently. Like we're always looking for the problem. And, so when they come to market, like the expectation levels are different. And I view this, and you can see it in the behavior. We mentioned Oracle a couple times now, but we can see it in the behavior of those bonds since they came to market. It's been a bit challenging.
The tangible investment is predicated on the leap of faith today. If that leap of faith doesn't occur, that tangible investments will come in. The market will force that discipline. Companies will force that discipline. You're starting to hear companies start to talk a little differently now than they were even, earlier in the year.